Welcome to episode 2 of Forging Ahead in India with VR Govindarajan, Govi as we call him, the executive chairman and the co-founder of Perfios, a company that has quietly become the financial infrastructure platform for most banks, NBFCs, fintechs, and now insurance companies in India, that's quietly powering the millions of loans that get handed out across thousands of towns and villages in India. And we are here to look at how this firm was built over the last 10 years, brick by brick, product by product, to where now it has become one of the default operating system for most banks across KYC, underwriting, to collections, to now venturing into insurance ecosystem, and now runs and operate across 15 other countries. So truly product company that's going global from India, and we are really proud to be part of this journey alongside with Govi. Welcome, Govi. Thank you for doing this podcast.
Thanks, Vishal, for having me over. It's fun always to talk to you.
Yeah, no, it's always been. I wanted to go back and start at the origin. When you started Perfios with D-Chak, as we call him, Debashish Chakrabarti, what was the original pain point that you were solving?
Okay, great question. So D-Chak has been a partner in crime with me for 35 years now. And so when we started, this was about 16 years back. The idea was to build a technology-based company because both of us come from a hardcore systems background. And we had just then exited our earlier venture called Aztec Soft, which was reasonably successful. So that gave us some financial cushion. And both of us were reasonably young at that point, although some people still dispute that. But so we said we cannot retire. We wanted to do something of our own. And since we come from a technology background, we said it has to be a technology-driven company. And Aztec, we always had a regret. While it was successful business-wise, we had a regret we could not build a product company. We did what was the next best thing. Today it's called outsourced product development. So we said in this company, let's just focus on product. And we did not want to do run-of-the-mill product. We said it has to be a pioneering, new kind of a product that will make a difference to whatever we do. So it was a technology-driven, category-creating product company. It was clear. Both of us said that's what we wanted to do. And we come from a hardcore technology background. And the ideal thing would have been, or easiest thing would have been to do a horizontal technology platform. But we said it doesn't make sense. We should solve business pain point because that will make it stickier. Because if you build a horizontal platform, there are smarter people than me around. They can go and build a much smarter horizontal platform the following year. So we said, let's focus on a domain and just build something for specific domain, and it has to be a global product. So that's how we started the company. So just to sum up all of this is essentially a technology-driven category-creating product company in chosen domains and chosen geographies. And what is the domain we started out with? Both of us had some spare money to manage at that point because of Aztec's success. So we said, let's do personal finance. Because there was no product that was available, or there is no product available even today that let people manage all their finances in an automated way. And we said, let's go and build this platform for a personal finance as a domain. It's not like we knew the personal finance. In fact, in my induction program in the company, I keep telling, before starting Perfios, the only financial services experience I had was opening up a couple of savings bank accounts, nothing more than that. And that is true for D-Chak also. So it's not like we knew that, but we said there's a pain point, let's go and solve that pain point. And that's how we started with personal finance as a primary domain, and that's the name of my company also, Personal Finance One Stop, Perfios.
Perfios, yeah. And what was the key insight which made you switch from the PFM to what is today bank tech? What was that key moment which sort of, when the light bulb said, oh, wow, what I've built here is a significant pain point for this ecosystem to solve for?
See, a lot of people package things retrospectively and say that's a strategy. I'll be lying if I say that was a strategy. It was a necessity. So we were doing PFM, a fantastic platform. I would say even today, I would say nobody has that kind of a feature. I still continue to use it internally. But the problem was monetizing it was a big issue. It was a B2C platform in a freemium model. And as you know, there is this famous saying, it says in a freemium model, if you have to make millions, you have to spend billions. And I realized it the hard way. And I neither had the capability to go down that path or interested in going down that path. And we tried multiple variations of that, selling it to chartered accountants, selling it to wealth managers, selling it to independent financial advisors. Everywhere it was clear that I could have built it like a lifestyle business, but nothing big. But having taken the earlier company public and all of that stuff, the goal was to build a global product company, much larger brand. So we were not willing to settle down for a lifestyle business at that point in time. And so after 2-3 years of struggle, it was not like an overnight movement or some key insight that came and hit me or whatever it is. We realized that we are not cut out for a B2C business. We cannot do that. But at the same time, we have built this wonderful platform which had the ability to suck any kind of data, structured, unstructured, in whatever format. I mean, while a lot of people like at that time, Yodlee or Plate or few people like that were doing the screen scraping business, what we did was, in addition to the screen scraping, we also built this entire technology that could read any kind of a document, whether it is printed, scanned, whatever it is, it could read, ingest, read, make sense out of it, all of that. Yes, it took a lot of time to build, but that was also the moat. So we had built this platform, so we said, we cannot do B2C, we don't seem to be cut out for it. So can we do a B2B business? Because we have done that in my earlier company. So we said, let's go and do a B2B without throwing any of this technology we have built. So the next domain we chose was essentially, at that time we considered lending and insurance, but we took lending. Again, it's not like I knew lending. As I said earlier, I had no exposure to financial services or anything. It was more of a gut call. Saying lending has been a pain. Some of us have taken educational loan or mortgage and all that. It was a painful process. Even today, it's a painful process. So we said, can we leverage this platform somehow and then make this whole lending process become simpler? And that was the whole idea. Again, it's not like I had done some serious research. Fortunately, we did not have money to do any of this research and all that stuff. Because on a lighter note, I'm sure you know of this, when Henry Ford was asked when he introduced that car, if you had done enough customer research, what would you have done? Maybe I would have built a faster horse, right? So that's what would have happened to us if you had done research and all that. Fortunately, I did not have money at that point in time to do any kind of research. It was a gut call, saying let's take lending. And then between me and Dichak, we put together, this is how it should look like. In about 2 weeks, he's a phenomenal architect. He built it in 2 weeks. Then it was left to me to go and sell it. That's how we flipped to the B2B model. It was definitely not an overnight thing. It was a compulsion.
Typical Govi, non-flashy and infrastructure led from day one. Was that choice deliberate, or that's market shaped that choice for you?
Being low profile. See, I think both of us, maybe our personality is like that. We have been, being a hardcore technology person, we were always back office oriented. We were never in front. Although both in my earlier company and in Perfios, I was the primary salesperson. But again, I don't think you need to be a flashy guy to be a good, effective salesperson. So we have always been like that, low profile. And I continue to tell my employees also, you don't need to be in the front page of pink papers. As long as we add value to our customers, that's what matters. And we make money.
Switching to the product and the platform evolution, and you talked about how Dichak built it in a couple of weeks, the whole product. What were
just to put it in perspective, I would say that was a POC. It's not like the product we see today in 2 weeks. But the thing was just based on an idea, he was able to do an end-to-end. It was not a wireframe or anything, working prototype.
So what would you describe the current Perfios product moat? Is it security? Is it data ingestion? Is it privacy? Is it scale? Is it latency? Or what is it that one feature or a combination of that drives the moat for Perfios?
See, before answering that question, let me give the original pitch and original positioning, because I don't think it evolved. It has evolved over a period of time. So it will be unfair if I just give what is today's thing. See, at the time we went to the market with whatever we built, it was not a pain point. Practically every prospect I met, basically these are all nice to display, nice to talk about, but it's not a pain point, get lost. Practically that was the response I got from everyone. And the reason was that at that time, banks were not looking at any of the competition. They had a captive million user customer base. Whether the customers liked it or not, they had to work with the bank. So that was the situation. What happened was fintech became a big buzzword. And then all these consulting companies like the Bains and McKinseys of the world, they said you have to have a digital transformation. Whether these institutions liked it or not, they had to have a checkbox. And then in India, there was this whole digital data was getting generated, whether it was a Jam Trinity that was making it happen or other kind of digital push, a lot of digital data was happening. So our pitch was, we said, the credit bureau hasn't penetrated much, and that is interfering in the notion of financial inclusion that we have been talking about. Because it is not addressing bulk of the population, because they don't have enough credit history. You are going after the same set of urban customers that can anyway, either they don't require money or you are going after the same set of customers. So we said we now have this capability of aggregating data, which is like alternate sources of data, all the way from banks to utility bills to all the jam related data. And then that combined with the bureau data, I can give far better insights into a customer so that you as a bank can go and lend it to much larger people. One, it will help in financial inclusion. You are addressing a much larger base. And two, more importantly, your business's top line is going. So it's not a cost efficiency pitch at all. It was more like I can expand your business. And then most important, I think that was what clicked for us, was that we said, please don't change the way you work. I don't want you to throw whatever you are doing. Everything is the same. Up to the last report that your credit manager is consuming, exact spreadsheet with the same cells and same rows I'll give you. Only difference is today it takes 3 to 4 weeks for you to get that report. I will give it to you in 3 seconds. Everything is the same, nothing else. And I will plug it into your internal systems or whatever it is. I think that was a powerful message for them because they did not have to risk anything. And that was our initial positioning, initial pitch, and there was a society message also in terms of financial inclusion. All that definitely helped. But coming from there to today, I think all those features are now commodity because anyone can go and build it. At that time, yeah, we thought about it, we built it, and then we kind of let know the market there is money to be made in this space. So today there are plenty of Me Too actors there. But today I think our primary differentiator in this will be the non-functional aspects, which is exactly what you touched upon, the scalability. Because today I have to, whether it's around Dasara time, Diwali time, New Year time, can I suddenly handle a 3x, 4x kind of a volume without the customer even knowing about it? I cannot go down.
And what's the daily volume at peak that you could handle?
So it will be literally millions. Say like, weekends obviously will be lower. Like 2 consecutive months, we have crossed about 15 million successful transactions. And typically our success rate will be about 65%, which means I'm looking at about 20-25 million, roughly about 1 million transactions a day, which I am seeing and processing it. And all this has to be done in real time because bulk of it is STP. It has to be done in real time with no downtime. And most importantly, it has to be with zero security privacy violation. And I don't normally brag, but I want to brag saying from inception to today, we haven't had a single instance of security or a privacy incidents in the company. So these I would think are the primary mode because these are things you cannot build overnight. See, it's very easy to go and build a flashy widget that can have a fancy UA and all that stuff. And obviously we are old fashioned, we may not have that kind of a flashy stuff. But these kinds of high availability, 4 nines or performance, real time and zero security stuff, all that it takes a while to build it. And that I would think is the primary mode at this point in time. That is one. The other thing is adding more and more data sources to the mix, saying, can I get more and more insights into that user instead of whatever is the user consented data. So I pull as much data as possible from public data sources also, so I can derive more insights into that. And the other thing that is a significant mode now is in the last couple of years, we have added more companies through acquisitions. They bring in other kind of data sources and insights into the customer. So those are all things, again, my competitor won't even have access to. So a combination of all of this is what I think is a moat at this point in time.
So in the current, the whole journey of unstructured data to structured data, which started almost a decade plus back, and today when unstructured to structured data through LLMs has become sort of increasingly what I would say access to hundreds of people, including me, and US consumers and several enterprises. How does that change Perfios' way of thinking in terms of uh, the product and the moat? If I can just use an OpenAI or an Anthropic at the back end to sort of read some of this unstructured data and put it in a structured data and then put it in a format as you described that bank has on an Excel sheet. What what Perfios does differently that an Anthropic or an OpenAI API cannot do at the back end today?
It's an excellent question. We keep answering this question every day. So obviously there are certain class of applications where what you are saying is absolutely true. What has been our initial pitch? We said extracting the data itself is a problem because it's buried in so many data sources. Account aggregator to some extent made that easier. At least for certain data sources, you don't need to extract it, so that extract mode was not required. Then the next mode was like, I need to do the analysis. So extraction is not a big thing, but once I extract the data, how do I do the analysis and then give the insights? That was the next thing. So today what all this GenAI and related LLMs and all of that do is for certain data sources that are available or what you can feed to it, it can definitely derive insights. Whereas previously I used to say my mode is I have this huge corpus of data and through the conventional machine learning algorithms and all that, only I can do all those learning and keep refining that model. Today that is not there because there is so much of data available out there and people can derive insights as much as possible. That is absolutely true. But what it does is for certain class of applications that may be true. For certain, by nature a GenAI is a probabilistic output, non-deterministic output. So if you run it through 4 models, you will get 5 different answers. If you run 5 times on the same model, you will get 6 different answers, right? So certain class of applications that require 100% accurate output or close to a accurate output with a deterministic output also. For example, if I do a medical analysis and want to do a diagnosis of a patient based on the medical records, I cannot say that one time you are a cancer patient and some other time some other patient. That's absolutely catastrophic. So I need to be absolutely sure that what I'm giving as a diagnosis is the right diagnosis, right? So there may be certain class of applications where you require that output, either it is achieved through human in the loop or something more that you do in your system. Human in the loop may not be scalable. So which means you have to do more in the system that will ensure that yes, a GenAI kind of output is producing something, but then on top of it, I do something so that it always gives me a deterministic, accurate output, right? So our mode today, we also continue to use GenAI and some of those related tools for various internal purposes. But things like 100% accurate categorization or the analysis that we provide and all that, I think that is something that we have built over a period of time with our own proprietary algorithms that will make a key difference. But you are absolutely right. Certain class of, let's say, a low ticket lending where I don't really need that kind of a thing, yes, you can do it pretty much with this.
And but a lot of the data that OpenAI and Anthropic typically have is what I would call internet data and don't have access to proprietary data. How does that change in our ecosystem?
Thanks for prompting that, because a lot of those are public data sources. Here, what we have been working with traditionally is public data sources plus consented data. Now, the consented data, especially in applications like banking, will always be equivalent of on-prem, will be proprietary. A bank will never share that or put it on the internet. That's their secret sauce. So we have always been working with consented data. And as I said earlier, through some of our acquisitions, we have access to a lot more proprietary data, whether it's a collection data, whether it's a fraud data, AML data. Now, what we are able to do is piece it all together with the user consented data and derive insights that not too many people can have access to, and definitely not the OpenAI, Anthropic kind of people, because these are not public data sources. So that is where our differentiation will come.
Understood. And that leads to my next question, which is, as you have made these acquisitions, built several products, starting with BSA, now account aggregator in place, fraud, AIML, healthcare piece, how do you sort of put together all this in what I would call a platform coherence or an operating system equivalent from being several point solutions?
Actually, this is a thing that evolved. I mean, even when we were doing BSc and we were very successful and almost 100% of the market, it was clear to us being a point solution player is not going to be sustainable in the long term. Because all of us have seen how Windows or Apple pretty much cannibalize the entire third-party software. To the extent that there were jokes at that time saying there is nothing called a third-party software, it is fourth-party software, because all the third-party software is being incorporated into Windows operating system, right? So we were very clear that unless we own the platform, we are going to be like thrown out eventually. Maybe today, tomorrow not, but eventually we'll be thrown out. So it was clear to us that we have to build a platform story. And even when we were doing initially BSA and GST and few other pieces around it, that's how we did that first acquisition, a small company called Fintech Labs, where we kind of acquired them and then built an equivalent of a platform for an LOS. And then the next acquisition was a company called Karza, which was doing a lot of this onboarding KYC related thing. So the pitch to our customers was all the way from a lead generation, onboarding, underwriting, monitoring, maybe down collections and all that. We will do the entire end-to-end piece. So it's very easy to go and do a particular point solution. But for you to stitch all of this together and say that I can be that trusted partner you can work with, because a lot of banks don't want to work with 10 different vendors. They want to work with one trusted partner that can pass through all their infosec and all of that kind of stuff. And that's what for the last 7-8 years we have been trying to build as a platform, saying I'll do end-to-end, from lead generation up to collections, loan management system and all of that. And all our acquisition was fitting into this theory only, that whatever we cannot build internally on our own, or we have not been successful building, and if there are other companies available, and if there is a meeting of minds, let's go and acquire them, and then ensure that we fill all these gaps in this. So that's how this whole, today in lending, we can do pretty much everything. The collections fitted into that, the monitoring piece through Clarify fits into that, Karza fits into that, the Fintech Labs fits into that, providing that platform. So that was on lending. And in between, what happened was we said, why don't we, again it was a gut call, saying instead of taking financial statements and doing all of this, can I take hospital bills, diagnostic lab report, discharge summaries, combine it with individual's medical insurance policy, and then do medical claim processing in real time. Instead of generating a credit report, can I do medical claim processing in real time? Can I do the fraud, waste, abuse on top of it with all the data that we have done all of this? So this was again a gut call. Again, we did not have enough money to do a commission research and report and all that. So it took about 18 months for us to establish that this is possible. This also proved our initial hypothesis, saying we will get into chosen domains. Started with PFM, we moved to lending, now we moved into insurance. And about 18 months, we were convinced. We worked with a large insurance player in Southeast Asia, and they were quite happy with that. Then we said, this becomes an interesting play, so let's do it in addition to lending. There also now we are doing this entire platform play. Can we do all the way from onboarding to underwriting, the medical underwriting, to now FWA and all of this stuff. So the goal is we will be a platform player where all of our pieces can fit in. That will make it stickier, and maybe more importantly for the customers, it becomes a single trusted partner that they can work with. And that will be our moving forward. That will be whatever acquisition we do or internal organic growth we do has to fit into that model.
So moving from platform to customers, these banks are massive Godzilla organizations, and when you are creating a new category, as you said, you get thrown out a lot when you are meeting very established, very regulated industries. How did that first conversation with a bank or NBFC, large NBFC, happen when they said, oh, this is a product that's real? Who was the champion that sort of said we should do this? Not necessarily the name, but just the process of how did you get there?
Actually, we were fighting two battles at the same time, maybe both of our own making. One was this category creating product, where I was trying to establish that this is a pain point, may not be a pain point today, but 2 years down the road, this is going to be your pain point. You better equip yourself with this. That was the first thing. So I had to evangelize, I had to convince them that they have to start using this. But more importantly, I was also trying to pitch to them the best way to do this is SaaS. Right? And this is to a crowd like a banker who says, the data that I handle is my crown jewel. There is no way I'm going to part with this data, and you have to come and work inside my offices. I cannot even allow people from outside my office to access my network, right? So imagine the situation. I'm a startup, no money. I'm not from that industry. Nobody knows me, or I don't know anyone. Going and preaching to them saying, Mr. Underwriter, you don't know how to do lending. And the question is like, have you done lending in the past? No, I have not done. So then I say, okay, not only you don't know how to do lending, you don't know how to deliver that also. It has to be done on SaaS, whereas you are doing it from a worst possible combination, right? So that was the challenge we had, but I think we made the right call, because if we had not done that SaaS pitch at that point in time, we could not have scaled. Doing it on-prem repeatedly across all these NBFCs bank would have been disastrous. We could not have scaled, and at the same quality. Whereas the SaaS pitch, somehow we were able to convince them, and the convincing was largely done through a CFO. I have to thank the CFOs of this organization, because what we had was a single spreadsheet that said 3 columns. What is the cost for delivering this service? The first column is your in-house on-prem, whatever, how much it will cost. Next one is a dedicated data center. Next one is a shared data center. And the on-prem was about 10x of the shared thing. The CFO said, this is no-brainer. We should do it as long as you comply with all my regulation, compliance, security, audits, and all of that stuff. We said, yeah, we will do all of that. And that's how they started. And fortunately, in this industry, if 1 or 2 players attest to the fact that these guys are good, so governance is great, security is fine, then all of them more or less accept that. And that's how it started. But pitching to the bank, convincing them was definitely, it took a lot of effort. And for one of the largest PSU bank, 3-letter acronym, we took about 5+ years to sign the contract. But it's worth the wait. And the way it worked was a couple of, I would, without naming them, I would say they are the 2 best innovators / pioneering BFSI players in the country today. One is an NBFC and one is a large private bank. So both of them tried it out. They had some good experience with it. And then that's how we started. I have to be thankful to them for starting this.
And what did they really buy? They bought ROI, compliance, safety, speed, or trust. What did they really buy?
No, initially it was feature. In the sense, they were not doing certain things that would not have been possible for them to have done in the current whatever infrastructure they had. So we were essentially taking them to a new segment that they could not have done otherwise. So for example, if somebody, especially a larger bank, wanted to do a 50,000 rupee loan, with that cost structure they could not have done. Whereas what we enabled them was SaaS model, so hardly any cost for them, and then everything digital, everything on real time, and no feet on the street. So they were suddenly able to address a segment, and that's exactly what I was talking about, financial inclusion. Now you can suddenly address somebody in a tier 3, tier 4 for a low ticket item, which meant you are able to bring a lot more people into the fold of credit, formal credit. Yeah. And it gave them a new segment. It addressed the financial inclusion problem. For us, obviously, we are building the business.
Yeah. Suddenly from I cannot do a loan below a certain size to any size fits, because the cost of actually processing the loan has crashed dramatically and instantaneous. That made you could go to the 536th district and still do this.
And the rest of the thing we talked about are hygiene factors. We have to have InfoSec, we have to have the trust, all of that is assumed. Of course, we have to prove it, but they were all assumed when they started working with us.
What would be your advice to a current founder who's building in this bank tech space and about enterprise selling to banks? What would be your words of advice to him or her would be?
See, obviously they may all be better salespeople than us, but I would say governance play a big role. Governance and trust, because I think most of these banks, more than features or a few rupees difference here and there in cost, what they're looking for somebody they can trust, because they're in a highly regulated industry. And at the end of it, the regulator is going to catch them by the neck. And if they can work with partners who understand that constraint and then support them in every way, that's what they are looking for. So I would think honesty is the best policy. If your product is not meeting the thing, please tell them. Don't oversell. It's not going, you will fall flat. And so I think governance, we get audited at least 100+ audits every year we go through. Not just the onboarding audit, CVC required audits on a regular basis we go through. It's a pain, but it gives me the comfort that, me the comfort as well as for my customers, that this is an organization that has all of this in place. So I think I would focus more on that, because some of these things are difficult to retrofit. Security, InfoSec, all that you cannot retrofit.
Yeah, yeah. And for somebody who handles millions of very sensitive financial data, and the defensive and zero incidents, which sort of is amazing for a company of this scale size. Have you ever faced an existential threat, and from any of the players or from bad actors in the ecosystem, and how did you manage that?
See, I won't call an existential crisis. A lot of questions on existential crisis have been asked, especially around, let's say, when an account aggregator was proposed. People said, if there is an account aggregator, I don't need you. Forgetting the fact that we were the ones who actually created that entire account aggregator ecosystem. Again, I'm not boasting, but we were a key player in making that happen. So what account aggregator did was, as we discussed earlier, certain class of things, it makes it easier. So to that extent, yes, my margin may be lower there and all that stuff. But at the same time, it has also expanded that addressable space. Because previously, people did not used to come to the formal credit fold. Now with the account aggregator, a lot more people are coming in. So it has expanded the addressable market segment. That is definitely true. And I mean, it was, the master direction document was released September 2nd, 2016. So 9 years, we are still existing and we are growing reasonably well. So we haven't ceased to exist. That is one. But other one small incident that happened was right after one of our funding. Unfortunately, we were tagged as a unicorn or whatever it is. And then next day onwards, about 2 weeks, 24 hours, constant pounding of our data centers from all over the world. And that was a very, very stressful period because that could have caused the existential crisis, because leaking of information or whatever else. I mean, as you said, we handle the most sensitive data, and 2 weeks of horrid time. Fortunately, the entire team worked together and ensured nothing really happened. But otherwise, we haven't really seen, because competition, I think, is a way of life. I need to live with it. I don't think that's an issue.
And what's really traveled between all this ethos to, as you've walked into like 15 more countries? Is it same solution set? Is it the trust and the governance factor? Is it a feature? How do banks and insurers in these 15 other countries that you're today working with, how did that journey start?
See, whether you like it or not, you were a key player in driving that journey, because as soon as you came on board, there was this pressure to get to international. So we started that activity, and initially my impression was, like a lot of us naive people think that everything outside India is phenomenal. And when we went to the market, to our pleasant surprise, we found they are at least a decade behind us in terms of at least this financial services that I am talking of, maturity. So which was great for us, because we were the first mover. There was not much of a competition. It was also a downside because I had to do evangelization again. I was pretty much in the same situation I was in India 15 years back. But that was okay. So we adopted this approach of mile wide and inch deep. So go and grab the turf. Sign up as many customers as possible. Yes, they may not give me significant revenue today, but 2 years down the road, they are the players who are going down this path. So about 3-4 years it took for us to stabilize, because practically every country that we operate today, Southeast Asia, Middle East, and North Africa, most of them require more or less similar pain points. So they require similar services. Of course, they have to be localized and customized to their needs and regulation. But we haven't found the regulation compliance to be a major issue, because in India we have done all of that. So replicating that in those countries, much smaller geographies, was not that difficult. And we had built all this security, privacy, all of that. So complying with their local data privacy laws were not that difficult. And just customization is what was required, because all these pain points exist in those markets. So only difference is those markets are not as large as India. But that is okay, because the margins are relatively, the unit economics is far, far better than India. So that's how we entered in that market. But now from mile wide to inch deep, now the strategy is, can I also become mile wide and mile deep?
Mile deep. So. And given today the Perfios product, expands, what are the still broken processes in the entire underwriting and decision making? And we can talk probably in two segments. One is the underwriting and decision making for a bank for a lending decision, and the entire cycle from what you would call sourcing to sort of underwriting to posting to collecting, that the entire life cycle of a loan in a bank or an NBFC. And second is the insurance ecosystem that you described earlier, from an admission in a patient to actually a discharge of the patient and then an entire claims process. So what's sort of still broken, and if you had to sort of in a perfect world, what would you do that this operates very seamlessly?
So let me address two parts separately. So if I take the lending thing today, unfortunately it's all because of legacy, I think. Most of the institutions still insist on such a custom journey, and each time you have to go and rebuild it for them. And each one of them will be a broken journey, in the sense it's not like a seamless, continuous digital. So there will be some touch points where the user will get off, and there may have to be some offline servicing that needs to be done, stuff like that. So what happens there is, because of that break-in journey, not everything is an STP journey. Because of that break-in journey, one, the banks also feel, or the financial institutions feel, that they're losing customers. So the funnel is this big, but because of the break, some people just walk away, right? The second part with that break-in journey is the customer experience is also bad, because they're not seeing, like, I come in here and then I have to now wait for 2 days, 3 days, someone else has to get back, all that stuff happens. And then the other thing, although I talked about this as an end-to-end thing, it's not end-to-end. Each piece is discrete. So what we are trying to do is, that's why this platform player doing all of this makes a lot of sense, because if I can kind of integrate all of this to make it look like one smoothless, seamless journey, that will be a fantastic customer experience. But the biggest challenge for us will be to convince a bank that you have to change some of your existing journeys, or at least the new journeys, structure it such a way that this is flowing seamlessly from start to end. The technology is there, we can make that happen, but it is largely how do I translate my existing journey and customer base to adapt to this. And the same thing is in the insurance space also. Insurance is even worse because they are even more laggards. A lot of it is completely manual today. So how do I kind of ensure that the seamless journey is built? Again, technology is not the issue. It's converting the existing insurance or lending player to adapt this.
Is like a digital bank in the box a possibility?
That has been talked about for the last 7-8 years. In the context of India, what I've seen so far is, the BaaS or digital, a lot of the bigger banks themselves have built that. So one of the resistance we find is when you go to some of these banks, they say we already have the capability and we are building a lot of those, which may be true in some cases. Maybe this is applicable only for a small bank where they don't have the capability to build this. But larger banks, they have either a digital arm or a CDO or somebody who is building all of this. So you find resistance in multiple forms. They will say not invented here syndrome. And we have a large team. How do I justify my existence? So they may not build it, but still it will be tough to penetrate. But whereas in an external market, what you are saying is absolutely true. Whether it's a Malaysia or a Philippines, there are, in fact, we have started working with quite a few of those digital banks. There are small entities, completely digital, and there all these are possible. In fact, one of the areas of growth for us in the next 2-3 years is open finance in Middle East, Southeast Asia, all of that, because that's completely ripe for disruption there. Whereas in the context of India, the open finance, the closest is the account aggregator. But beyond that, we haven't seen much of a traction.
You talk a lot about the Perfios culture in your town halls and conversations with people that you hire. How do you describe the Perfios culture, and what have you done to sustain the culture over so many periods of time, growing from few single-digit people to now 1,000+ people? How does that culture permeate over a period of time for all the people in the organization, including the acquisitions that you would have done?
Actually, that's a very critical area. Unfortunately, a lot of youngsters don't appreciate that. Older people like me can relate to it easily. Hopefully you can also. So See, the reason I mean, when people ask me what are a couple of things that keep you awake at night, a lot of people ask me, I say two things. One is data, because we handle the most sensitive data, and we are only one leak away from a disaster. I mean, whatever technology, system, process I have in place, we don't know what will happen, and that's something beyond my control, but that's definitely a worrisome area for me, because it's a reputation loss. But the second area is culture. So why am I saying culture is important? By culture, what I mean is things like your value system, right? Everyone says integrity and all that. That's all taken for granted. It is a hygiene factor. But more importantly, things like innovation. See, I feel a company like Perfios can exist only if it is a constant innovation culture. I cannot continue to rest on my laurels. I cannot say, oh, I am working with every possible financial institution, let me coast along. Then I will become a case study in Innovator's Dilemma book. I don't want to be a case study there. Right? The only way I can avoid to being a case study is continuous innovation. Innovation not driven by the CEO. Everyone in the organization should have that in their culture. Whatever I'm doing, am I innovating? It need not be disruptive innovation every time. It can be incremental, right? So innovation, I would say, is a key part of my culture, and that has to be there. It cannot be one ivory tower organization called R&D that is innovating. No, it has to be across the organization. The second thing is typical startup mindset of ownership. Because as an organization, whether I'm 1,000 people, 10 people, 5 people, I keep telling folks, you have to play the role of all the way from a janitor to a CEO, depending on whatever is the need of the day. When I walk into an office and my toilet is clogged and I'm expecting a key visitor, I won't be waiting for a janitor. I have to go and unclog that, right? So similarly, I have to play the role of a CEO if my CEO is not there, right? So that ownership, which is a typical startup mindset, has to be there whether you're a 1,000 people company or a 5,000 people company. Otherwise, if you're an order taker and say that, okay, if you give me a task, I will do it and then throw it over the wall, then we are a services company. I don't want to be that. I want to be an innovating product company. So that is a key startup mindset, has to be there. Third is governance. I talked about it earlier. Even when we are 2 people, we had all the processes and systems in place and we were compliant. And to the extent, hopefully you can also attest to that, practically every round of funding, we have found practically close to zero non-compliance or nothing major, right? And that is largely possible because of the emphasis on governance. That has to continue. We cannot dilute anything there. And then finally, frugality. I continue to say that just because we have 4 of the best investors, I'm not saying this because we are here, but just because we have 4 of the best investors, we are profitable, we have cash, we cannot be throwing money away. Yes, we will go and acquire companies if it is required, we'll spend it in the right way, but we have to be frugal, that has to be in the culture. And final thing is the open culture. So far we have practiced that, where anyone can come and talk to anyone can question anything. I hope we will continue that culture. The risk I see is as we grow very fast, as we acquire companies, as we get people from other organizations. I'm not saying this is the right culture, but I'm saying this has worked for the company so far and I hope I can continue this. So the issue is, how do I ensure that people who are coming in from outside get assimilated in the right way and they continue to follow this culture? That is a risk.
So if you're to sort of reimagine Perfios 5 years or 10 years down the line, what product suite do you think Perfios, it looked very different in 2015 when we had just started the BSA. It looks very different in 2025. How do you think it looks in the next 5 to 10 years?
See, fortunately, that first tagline still remains the same. So what I think would happen is we will be the perfect lending player covering every hole in that entire piece. Same thing in the insurance. So today it may be only medical insurance. Nothing prevents us from addressing life or motor or adjacent spaces. Third thing is, like one of the acquisition we did, IHX, gives us phenomenal access to the healthcare, the provider space. Healthcare is again a phenomenal space to get in because it's laggard, it is waiting to explode, and we have all the pieces in place to go and address it, and IHX gives us that kind of access to data and the customers. So healthcare will be the next domain I think we will, so from PFM to lending to insurance, to healthcare will be the next one. And then the other pieces, I think it's all gazing into the crystal ball. So could be this whole embedded finance, banking as a service, or DeFi in whatever format it happens, whether it's a stable coin and CBDC, whatever else. Definitely that is going to be a big space. And since we are entrenched in the banking sector and understand all of that, those are definitely areas we have to somehow get in, and we feel we will get into it. Because today we are primarily in the asset side of business. So the liability side combined with some of these newer technologies, newer things that are happening is where I think we will naturally gravitate.
So you talked about going from a small company to now having raised capital from a whole host of investors over the last decade or so. How's your relationship with investors changed from your very early days today, and what do you think as you go public at some point of time, how will that evolve?
See, fortunately, from when I was operating as two-people team or a couple of angel investors to now with four of the best global investors, nothing has really changed. And one data point I'll give there to demonstrate that is, we had so far 103 board meetings. Every one of the board meetings, every one of the resolutions so far has been unanimous. There has never been a vote. So which means either the investors trust in the management, or the management is fully working with the investors to make sure that all of us are rowing in the same direction. So that is one data point. Second thing is, whether it was initially angel investors or now with four institutional investors, board meetings have become more of just a statutory compliance we have to go through. Because there is so much of informal conversation that I have and the management have with the investors. All of them are up to speed on what is going on. And again, as I mentioned in the context of a sales process, here also I think governance is the best policy. If you have good governance, they trust you and they give you the complete freedom and ownership. That's why I keep telling my investors also that when I read in business papers about the boardroom fights and all that, it is very strange to me. Because I've never experienced it either in my earlier company or this company, and I think the reason for that is governance.
Moving on to rapid fire questions, 5 of them. One myth about selling to bank founders, need to stop believing. What is one myth that founders need to stop believing in when they're selling to bank?
It is possible to sell. If you have the right value proposition, you can sell.
One product that you built too early in Perfios?
PFM.
One product you wished you had built earlier?
The current product that I am doing on insurance, the whole fraud stuff, the AML fraud, which I could not build, I had to acquire.
One global fintech that you admire and why?
Say, Plaid is a company I would like to because of the scale. May not be for technology or whatever, but the scale and they are withstanding exactly the same pressure that I'm going through in a smaller scale. Today in US, there is this talk of all this open finance, all that stuff, they're able to withstand that.
And one, if you had to forecast what's going to happen to bank tech in India in the next 10 years, what would it be?
It will be a technology company where financial services is part of it.
Awesome.